Hello and welcome to this edition of Ask Chip Anything, where you get to ask me, well, anything. I am Chip Griffin. I am the founder of Agency Leadership Advisors. I work with agency owners and executives to help them build the businesses that they want, achieve their goals. And with that, let's jump right in because I know questions have already been coming in through the Ask Chip page on the Agency Leadership website. I've seen some already come into my email, and so we might as well jump in and start answering those questions. As always, the questions can be submitted either using the question box right on your screen, or you can send an email to chip at agencyleadership.com. I'll be keeping an eye on that off to the side here while I'm continuing to speak with all of you. And I know some of you are a little bit more comfortable with the email because the way that this webinar is set up, if you ask a question, it's listed publicly. So if you want some anonymity, feel free to send me that email to my inbox, and I will be sure to field it. Keep them brief if you can, because that will help me read them more quickly here on the air as we move through. I'll try to answer as many questions as I can in the time that we have available. Of course, there will be a replay available for anyone who is interested in going back. So you can feel free just to listen and not worry too much about taking notes because you'll have an opportunity to go back and rewatch anything that you want to look at in more detail. So, as I look at the questions that have come in before this recording begins, one of the things that I note is that a lot of the questions, as always, seem to be about the coming recession, and this is something that Ginny Dietrich and I talked about. In the last couple of episodes of the Agency Leadership Podcast. So I'll include a link to that in the notes for this uh, broadcast when I put it up. But in general, what I'd like to say in response to some of the specific questions, because it looks like some of the folks have listened to the episodes of the Agency Leadership Podcast and had some follow ups. One of them was, how can I take advantage of the recession? And I love that question because it really puts you in the right mindset to think about the possibility of a recession, not simply as a challenge, because it absolutely will be that. There's going to be pressures on your business when we get a recession, whether that's in 6 weeks, 6 months, or 6 years from now. And so you want to make sure that you're well buttressed against any of the challenges that can come up. You want to make sure that you're focused on diversifying your revenue, not being too dependent upon particular clients, making sure that you have a rational cost structure, that you're not in a position where you're top heavy with staff or you have a lot of long term commitments that you can't be flexible with as your business adjusts. And frankly, these are all things you need to be thinking about at any point in your agency's life cycle and not just in preparation for a recession. But the what I liked about the question was it looks at it not just as a challenge, but really as an opportunity. And for many of you out there, many of the folks that I talk to who are running, small to mid-size agencies, maybe $1 million, $5 million, $10 million, you are the kind of agencies that can be a lot more nimble, a lot more flexible, and can challenge some of the bigger players pretty effectively if there's an economic downturn. It's a time when bigger players tend to have a lot more fixed costs. They've got a lot more infrastructure. It's a lot more difficult for them to flex. Whereas if you're in the seven figure range as an agency, you're probably relying a lot on contractors. You've built a pretty scrappy business in all likelihood. You're still engaged as the agency owner, and you can sense the pulse of the prospects and the clients much better than some of the leaders in the larger firms. And that's not a knock on the larger firms, it's just reality. The bigger you get, the more challenges that you have to overcome. When you're small, you can take advantage of these contractions and you can go out there and say, look, Mr. Client, you are right now paying a lot of money to a big agency. We know you're looking to cut back on budget, but at the same time, you still want results. You still want earned media. You still want to have a social media presence. You still want to do marketing activities. And if you're going to undertake all of those activities, you still need help. And in fact, if in challenging economic times, some companies will be more apt to contract work out to an agency than they will be to hire up staff. So they may leave openings on their full-time salaried staff longer and fill those gaps by contracting work out to agencies. So if you're smart and if you're thinking about how you can do this creatively, there will be opportunities in a recession, assuming that you've taken care of all of the basic challenges that you already have in place. So absolutely look at a recession not just as a challenge, but also as an opportunity. The other question that I got about recessions that uh, was sort of a follow on to what Jenny and I talked about in the podcasts was if there is going to be a recession, should I be thinking differently about how I'm going to staff? And we touched on this a little bit in the podcast episode, but I guess my advice to you would be probably again, this is one where you don't necessarily want to change because of the coming recession, but if you have opportunities to contract work out and be flexible, you should always take that. But maybe if you're particularly concerned about a recession, this is a particularly good time to be thinking about it. Now, of course, there are all the challenges that I've talked about in other places about uh, if you rely too heavily on contractors, if you're putting out the effective work of a full-time employee out to contractors, your margins are going to be smaller because typically you have to pay more to contractors than you do to a comparably skilled employee. And that's because contractors have their own overhead, have to pay for their benefits and taxes and that sort of stuff. So there's you gain flexibility, but you lose some margin. So that's something you need to weigh. And so you wouldn't want to ever be in a position where you're totally dependent upon contractors. You do want to have the full-time staff when it's appropriate. But if you follow the general advice that I'm not unique in giving, which is to hire slow and fire fast, you'll probably be in a pretty good position. So, all right, enough about recessions. Let's move on to some other topics that have come up. Another one that question has come in: how big do I need to be before I can sell? And so, obviously, in my consulting work, I tend to work with a lot of agency owners who are contemplating the possibility of selling at some point, whether that's a couple of years down the road or a couple of decades down the road. It's at least on the minds of the agency owner. And this question that came in through the Ask Chip pages pretty similar to what I've heard from a lot of my clients, which is how big do I need to be before I'm a sellable business? And that's not an easy question because there's really no magic number. There's certainly if you get to a certain size, you become palatable only to much larger businesses. So if you're an agency that's say 20 or 30 million dollars, your pool of potential buyers is a lot smaller than if you're an agency of just a couple of $1 million. So, getting larger certainly makes you more attractive in some ways, but it can also burden you in some ways, or at least shrink the pool a little bit. So you need to be mindful of that. But look, agencies that are just a few $100,000 a year sell. Obviously, they're not going to sell for the same kind of price that a multi-million dollar revenue agency will sell for. And there are certain, I don't want to call them penalties, but there are certain obstacles to getting maximum selling price when you're in that kind of smaller business. Typically, the owner is very engaged, not just in business development, but also client service. So those deals are going to be heavily skewed towards earnouts. And really, if you're a business that's under say $1 million a year in revenue, really what the acquirer is doing is it's called an acqui-hire. That's a term that's been very common in the tech space, but I think it's starting to get used more in the agency space as well. And that's effectively saying, if you're a sub-$1 million agency, you probably only have a handful of employees plus the owner. And so, really, what the larger agency at that point is looking to do is to come in and swoop up some talent. They're not really buying the business per se; they're buying the talent and maybe the clients as well. As you start getting into the seven figure range, that 1 to 5 to $10 million business, now at that point you're starting to build something that looks like a real business, and you can start to be in a position where an acquirer is really looking at the totality of the business and not just the talent within. So at that point there'll be more of a look at track record, last 3 years financials, looking at profit margins, looking at the structure. And so then really what you're thinking about is not so much have I gotten to the right level of revenue to maximize my price, but have I structured myself correctly? Is my agency dependent upon me, or do I have the ability to have a strong middle tier, a number two, other people around me as an agency owner who will help grow the business and who will continue to remain with the business long after I'm gone. Now, do keep in mind, if you're selling your agency, you're going to be there for 3 to 5 years afterwards. It's not, you don't sell your business and just walk away in most cases. That is extraordinarily rare in the agency space. So don't be looking at it in those terms. But bottom line is, it's not so much about a magic dollar figure that you need to get to be able to be sold for a maximum value. It's all of the things that go into it. It's your revenue, it's your profit margin, it's how you're structured, it's what your client concentration is. Do you have a giant whale client that's 50% of your revenue? Well, that's going to cause a real discount in the purchase price that someone's willing to invest in acquiring your business. Whereas if you're nicely spread out, no clients more than say 15% or so, okay, that starts to look like a more stable business, a more repeatable business. Similarly, if you've got good profit margins that have held steady or improved over the last 3 years, if you've got revenue that's moving up, these are all things that will work to your benefit in maximizing the price. So don't fixate on saying I need to get to 1 million or 3 million or $5 million in order to sell. It's really the whole package that's involved in that question. Okay, let's see. I see one just come in on email, and this one is from an agency owner who says, "Should I give equity to my employees?" Okay, and actually, this is one I think that's going to be covered in an episode of the Chats with Chip podcast that I did with Brad Ferris. It'll come up probably in a few weeks from now. It'll be published, and so equity is complicated, and I generally say be very slow to give away equity in your agency, and that's whether that's to employees, long term or otherwise, but it's also to partners. You need to be very, very thoughtful before you give away actual equity or stock or shares or units or whatever it's called based on how you're structured. If you're going to give someone an actual percentage of the business that they own with all the rights and responsibilities that entails, that's a big deal. And it's the kind of thing that can have a real impact on the employees as well, both for good and bad. So it's certainly not something you'd want to go into without clear conversations with your accountant and lawyers to make sure that you are doing everything properly. But it's also the kind of thing where you need to make sure that whoever is receiving the equity is also thinking about what are the ramifications, what liabilities are they now on the hook for, what tax consequences are there for them, those sorts of things. So instead of actual equity, I think that it's important to be thinking about other ways that you can compensate folks, whether those are various bonus plans. Maybe in the past, I've structured some of my businesses so that key employees know well in advance that they're going to receive a meaningful bonus in the event that the company is sold. And that can be a very effective alternative, because you really want to get at why you're giving away equity in the first place. What is it that you're trying to achieve? Are you trying to retain employees? So maybe you look at a compensation structure where they get a tiered bonus. They get a portion of it today, but then a portion of it vests over time. You may want to look at alternate approaches like phantom stock or stock appreciation rights or things like that. And these are all fancy terms for basically saying, I've got a piece of paper that says, in the event of some sort of a transaction, you get a designated percentage as if you owned that equity, but you don't actually own it. And so it certainly gives you a lot more flexibility as the agency owner, but it also is a lot less complicated to implement. The other thing to keep in mind here is that anytime you're talking about one of these deals, whether it's um, I guess I would call it equity light in the form of phantom stock or something like that, or a bonus plan, or actual equity, you want to make sure that you are thinking about what do you do when something goes wrong? What happens when you terminate an employee? What rights do they have at that point? You obviously, a smart employee is going to want to make sure that in the event that you're selling the business, that you don't just go and terminate them the day before so you don't owe them a bonus. Now, obviously, the acquirer is probably not going to like that either. So that it would make a real mess of things in all likelihood if you were to do that. But you want to be thinking about how it is that you can come up with the best approach to solving that problem. And you want to think about those worst case scenarios, because it's very easy to spend a lot of time thinking about all of the good things that can happen, and coming up with plans for, oh gosh, we're going to sell for $10 million, and it's going to be, heaven for everybody. That's great, but you need to think about what happens when it goes wrong, and make sure that all of the paperwork that you're putting together addresses that. I think that the way Brad put it in the podcast episode that'll be coming out soon, he said you need to make sure that you have an exit strategy for any time that you've got a partner brought into your business. And I would just say I also talk with a lot of owners who are talking about not just giving equity to employees, but actually adding a partner. And this is not necessarily, in fact, often it's not someone who's currently employee. Often it's actually another agency owner, and they're talking about whether it's a direct merger or perhaps setting up a new firm together in addition to what they have themselves. There's a lot of appeal to having a business partner, and I can tell you, as someone who has run businesses with and without partners, that that I have seen good in both of them. Uh, Overall, I kind of like it with a business partner, but you've got to get the right one. If you end up with the wrong business partner or business partners, your life is going to be miserable. And so you need to be very, very thoughtful about it. And I would just also say, be careful about the idea of running two agencies at the same time. It's Any of you who are running agencies already, you know how hard it is. So the idea that you're going to have an agency as a solo owner, someone else is going to have an agency as a solo owner, but you guys are going to come together and build something new in addition to that, really, really hard to do. Not impossible. I've seen it done, but I can tell you that it is much less likely to be successful, and it creates a whole nother set of challenges. So be really careful anytime you're talking about an actual equity tie up. Look at things like stock appreciation rights, phantom stock. If you're talking with another agency owner, look at some joint venture ideas, things that are a lot less entangled than building actual businesses together. All right, I can see things have been coming in through email while I've been talking, so let me try to take a look and see. Um, okay, so here's a good one, and this is one I get a lot from some of the solo agency owners that I talk to, and that is, should I go from freelancer to agency owner? And so this is a really good question. I really like the way that they put this, because uh, this shows a real awareness. When you are a solo agency owner, the line between being what we would typically consider a freelancer and being an actual agency business, it's a really thin line, and it's really easy to straddle it. It's really difficult sometimes to know which side you're on. And I would say, in general, you need to be running your business probably for a few years if you're solo before you really say, okay, this is absolutely a business. Because look, bottom line is, if you're solo, it's very easy to wake up one morning and just decide, hey, this is not for me. I'm going to go work in house. Whereas if I've managed to build a business of 5 or 10 employees, the exit strategy is a lot different. I can't just get a call from someone else and pack my bags and go take the job. Well, I guess I can, and to be honest, I've heard of some agency owners in who have done that, but it generally doesn't end up well when you take that approach. Um, so how do you decide if you are quote unquote just a freelancer? And I'm in no way denigrating that. As I always say to agency owners of businesses of all sizes, you need to have a business that works for you, that helps you achieve your goals. It's why, in the framework that I've put together, the aim get framework for agency success, the A is for ambition. And I really try to drill down with my clients, what is it that you're trying to achieve? Because if you don't know what you want out of your business, you're going to have a very hard time making the right strategic and tactical decisions to guide that business forward. So, if you're a freelancer and you want to stay that way, you don't have any interest in taking on additional employees, you're not really looking to necessarily even bring on a lot of contractors to help you, that's fine. It's a perfectly legitimate way to generate income, and it's done by quite a lot of people. If you want to start shifting and thinking of yourself as a business, whether you plan to have employees or not, but you're really the line is sort of that you're structuring it more like a business, so it's not all just about selling your time. It is, you're putting together a network of subcontractors. You're putting together some productization or processes or things like that you really can sell. At that point, that is a different approach. It requires a little bit of a different mindset, and you need to be at that point spending a lot more of your time thinking about building the business than on performing the work. As a freelancer, you can probably spend 80% of your time doing client service and 20% building your network and finding opportunities so that you always keep a full plate in that 80%. If you're starting to think about running it as a business, even just as a solo, you need to be thinking about spending, probably not more than 50% or so of your time on client service. So it is a big shift in approach. It's a big shift in your day to day that you need to make if you're looking to turn it into a business, particularly if it's a business that you think you might be growing by adding actual headcount. So, how do you decide if this is right for you? Well, that goes back to the ambition bit. You need to think about what it is that you're trying to achieve. What do you want to generate as far as income? What do you need to generate as far as income in order to make your monthly commitments, your annual commitments, whether that's to family or it's to retirement plans or educational savings or whatever it is. And then you need to think about, okay, once I know that, what do I really, what am I looking for? Am I measuring my success because I've built a good growing business and I've added employees? There are plenty of people who do judge themselves in part by that and how they're perceived, and that's fine. If that's what you want, then you need to be certainly thinking about the business route. If you're simply looking to implement a lot of great ideas with clients and have the flexibility to work when and where you want. Okay, well, maybe that skews more towards the freelancer side of the equation. So there's no easy answer here. It's really just being thoughtful about where you want to go. Start looking out, 1, 3, 5 years as best you can and say, okay, here's where I'd kind of like to go. And then I'm a big fan of modeling. So if you are looking at a plan, you need to actually start putting numbers behind it and working things out on whether it's the back of a napkin or an Excel spreadsheet or something more sophisticated. But you need to certainly work through things like how much time do you want to spend? What does that mean from a client service perspective? If you only want to work 20 hours a week, what's reasonable from a client perspective to achieve there? If you're willing to work 60 hours a week, but you want to make six figures, mid six figures, who knows what, whatever the number is, you then need to do the math and say, okay, let's say I want to make $250,000 next year. What does that look like? How many clients do I need to have? What size do they need to be? When would I need to sign them in order for that to work out? And a lot of these projections fall apart because people like to focus on the big picture, the big numbers, and they don't think about what does it take to actually achieve that. So, if you're in a position where you can only work part time because you've got some family commitment or whatever, maybe you've got small kids or you've got elderly parents you're taking care of, or who knows what. There's so many different scenarios these days. You need to think about, okay, if I can only commit those 20 hours a week, can I actually generate the kind of income I need to in that by being a freelancer? Or, is it practical to spend 20 hours a week and build a business? Probably not. It's going to be challenging to do that unless you've got someone working with you, you've got partners, you've got key employees, whatever. So be thinking about all those things, and all of that needs to go into the mix as you decide whether you want to remain a freelancer or you want to go on to the next step and turn it into a business where you can scale it up. Um, let's see. How much revenue do I need per employee? Okay, this is we actually had a podcast episode about this one not too long ago. Well, actually, I guess almost a year ago now. So now that I think about it, so I guess it was a while ago. Look, bottom line is I am not a huge fan of rules of thumb. Um, I say take rules of thumb with a grain of salt. I will still pass along some rules of thumb here in a moment, but you need to be looking at your business and saying, okay, is it generating the kind of income that I need? Is it the profit margins feel healthy to me? Does it feel sustainable? Is it scalable? All of those things that you need to look at. Uh, Look, the rules of thumb were built in days when agency businesses were a lot more homogenous across the board. So agencies really were they differed in who their clients were and who their talent was, but there wasn't as much differentiation as there is today, particularly as the lines between PR, marketing, advertising all blur. Everybody's got their fingers in everyone else's pie. You've got a lot more of a mix between full time and part time employees and contractors and subcontracting agencies and vendors, and there's so many different permutations. So and if you look at some of the large listings of agencies and how much money they generate, whether that's PR Week or Dwyer's or those sorts of things, you will see a huge variation in the revenue per employee. And that doesn't necessarily mean that because someone's got a higher average revenue per employee that they are a much better business. It just may mean that they are differently structured. And so some folks try to fix this, if you will, by saying, okay, instead of doing it by employee, we'll do it by FTE. So we'll try to estimate of that contracting workforce we have, what is that equivalent in employees? But that's an inexact science as well for all sorts of reasons. And all of those of you out there who are using contractors, that it's difficult to paint them precisely as a certain number of employees because you're buying expertise. You're maybe in some cases you may not be contracting with just a freelancer. You may be contracting with a smaller agency or even a comparably sized agency that just helps you with particular things. So in any event, but if you want some rules of thumb are generally speaking that you certainly wouldn't want to see less than $100,000 a year in revenue per employee. Anything around 200 is very strong. If you start getting north of 200, then you're in a position where you're probably either really profitable or you've got some kind of a unique business model to how you do things. And if you look at some of these ranking listings, you'll see that there are some agencies that actually go up three or $400,000 per employee, but that's typically because they just have a very different business model, very different structure. So you want to take a look at all these things. There are some geographic dependencies here as well. If I'm running an agency here in New Hampshire versus one in Manhattan, the salary structures tend to be pretty different in places like that. The overall cost structures, office space is very different. I can get an office here in New Hampshire for far less than I could get it in Manhattan. Trust me, I've done it. I've leased offices in Manhattan, and I can tell you it is not cheap. And so you want to you really want to be thoughtful as how about how you're looking at this and not get too hung up on comparing yourself against a certain benchmark because you'll wrap yourself around the axle very quickly with very little positive result. So, all right. What are the best time tracking tools? What do I recommend? So I'm actually working on an article for the agency leadership website, looking at some of the different options here. I will tell you that the one that I typically recommend is Harvest. It's the one that I use personally in my own businesses and have for a number of years now. Generally, pretty happy with it. It does a nice job of keeping it simple while still getting me the data that I need. Um, it's going to depend a bit on what kind of integrations you're looking for with other software. What are you using for an accounting tool? Do you want to integrate or not? And there's pros and cons to integrations. They often sound nice in theory, but then you get down to the practice and it becomes more interesting, if you will. The other thing to keep in mind with time tracking is whatever tool you use, you want to think about not just the tool, but how are you structuring it? So with Harvest, I can set it up so that there's a gazillion different categories per client or project, and I can get really granular. And I know some agency businesses that do this, and they really try to get into how much time is being spent on phone calls for this client, how much time is being spent on emails, how much time is being spent on creative work or writing or all those kinds of things. And that's fantastic, but I will tell you that the more complex you make it, the more categories that you have, the less likely you are to get accurate information. And part of that's because employees, And frankly, as an owner, you need to be doing these yourself in part because you will see where the weaknesses in the system are. If you're just demanding it of your employees and you're not doing it yourself, you will miss things. You will assume that it's easy to do, and in fact, if you're doing it yourself, you say, "Oh gosh, I can't believe I have to, check off all these boxes or drill down through this many choices in the pull down to get to where I want to go." So you need to think about it from a business perspective. What information are you actually going to use? How are you going to consume it? And how can you get that greatest level of accuracy? The accuracy comes from keeping it simple. Uh, you know, Maybe you don't break up every client by every individual project. It sort of depends on how you're structured and are the projects billed separately or not. Generally speaking, you want to tie the client projects to what you're actually billing. So, if you are doing two big projects for one client, even if they're ongoing, you may want to split those out so that you can track it accurately. And this goes back to the project budgets that you're putting together. And let's put a pin in that, and I'll talk about project budgets here in just a minute, even though it wasn't specifically asked, but I think it's important to this conversation. And you need to think about uh, what level of accuracy you're looking for. So I typically encourage folks to track time in quarter hour increments. Lawyers will do it in 6 minute increments. Some agencies picked that up as well, and so they try to get that granular. The more specific you get a greater illusion of accuracy, but not the reality of it. Really, the key is to try to get folks to input their data in as timely a fashion as possible. Most of these tools have automatic time stopwatches built in that you click start, do a task, click stop, it records it automatically. Almost nobody uses that. Most people just manually enter their time. And of course, you also have to keep in mind that it's part of your job as the agency owner to be educating folks about why it's important to be tracking time. Generally speaking, people see this as just Big Brother. You're just coming in to try to spy on them and see what they're doing because you're afraid they're playing solitaire or I guess probably Fortnite or something these days. Probably solitaire is not nearly as popular as it was when I was a young pup employee. But in any case, I digress. So you need to be explaining that the benefit of time tracking is really it's for the business, but it's for them too because you can see what's getting them stuck. Where can you get them additional training, maybe additional resources? At what point do you need to push back on a client and say we're over delivering, we're over servicing here? We need to right size this project. How can you take some of that burden and pressure off of the individual employee? And time tracking is a really good way to give you the information that you need to do that reliably. It also helps you figure out when you need to hire new folks. So, explain that to your team and explain that, as you're looking at utilization and as you're looking at time tracking, this is all to really benefit not just the big business, but also their individual situation. So they have an incentive to report their time and report it accurately. And that's where you also get into the challenge of you need to be very careful about what you demand of your employees as far as things like saying, okay, you need to spend 80% of your time or 90% of your time on client service, or you can't spend more than 10 hours a week on this client, or I expect you to spend at least 3 hours per week on this project, or whatever. And these are all things that, look, I've done it too. It's very common. It's a typical management structure technique. But if you're doing that, and if you're painting the picture in that way, oftentimes the data will start to fulfill whatever that obligation is, right? So, and I think back to my days as a junior account executive at an agency many years ago, and we had some of those rules in place. And so we had a very big client, and we were told, okay, you can't spend more than X number hours a week on this particular client. And so the project team, we would sit there, and at the end of the week, we would make sure that we didn't report more than that number of hours because we knew if we did, we would get chewed out. So they weren't going to push back on the client; they were going to tell us we needed to be more efficient. At the same time, if we just stopped work, we would have a really ticked off client, and we were the ones who heard from the client day to day. So we weren't going to do that, and so we tried to find a way where we could thread that needle and be as honest as we could on our timesheets while still delivering the client what they wanted, so that we could keep them happy. Similarly, if we're told, okay, you need to spend a certain number of hours a week on business development or marketing or something like some internal function, that's always the kind of thing that tends to fall by the wayside when you know when things are happening on the client side. So maybe I record some time that I didn't spend working on those things, or maybe I cross count things. Maybe there's something that I should really count as professional development, but I counted it as business development because that's really where the priority is from an agency leadership perspective. So you really need to think about what messages you're sending in order to get the most accurate information possible. The bottom line is you need to be doing time tracking. You need to try to get it as accurate as possible. Talent costs, employee costs are the biggest expense for just about every agency. And if it's not your biggest expense, you're probably a quasi agency. You're probably in another line of business in addition to the professional services work that you're doing. So if you're not going to be really figuring out how that investment in people is being spent, you're not going to be able to generate the kind of profit margins that you need to be a growing, thriving business. And as I said, I wanted to just spend a moment on project budgets because of this question. And your time tracking feeds your project budgets. You use historical information to help you build project budgets for new clients, new projects, but it also feeds the evaluation on a monthly basis and a quarterly basis and an annual basis of the work that you're doing for your clients. So you can figure out, are you over servicing? Are you under servicing? Are you generating the kinds of gross profit margins that you need in order to be successful? What lessons are you learning for future pricing, future scoping? And so that time tracking is critically important to the project budgeting component. And project budgeting is really the core of your profitability. So every agency that I know of goes through some sort of an annual budget plan or forecasting or projections or whatever you want to call it. But if they're not building that on the individual building blocks of the clients and project budgets that they have, they're not really building something that's reliable. They're really just throwing a dart at the wall and coming up with some estimates. Those project budgets are the lifeblood of a profitable agency, so you need to do them correctly. Um, Once you get a format that works for you and you've got a process in place to work with it, you want to make sure that you're sharing the information with your individual project managers. Don't hoard all of the financial information just in the owner's office. You need to make sure that you're parceling out the appropriate information to those project managers, the people who are running the client business on a day-to-day basis, so that they know what their targets are, can work against them and use that information to manage resources appropriately. So be really considerate of the project budgeting process. And this is something where there's a free download on agencyleadership.com of a guide to doing project budgeting. It's got a lot of things in there you might be overlooking in your current project budgets. The one that I see quite often when I'm working with clients is they forget to include travel costs in there. And with more and more agencies not working just with clients that are a cab ride away or a car ride away, and places where you have to take a train or a plane or what have you, you need to make sure that you're factoring in those meeting costs because that can make a huge difference, particularly for small to mid-sized agencies where, if you've got a client that's, providing, 50 or $100,000 a year of business and you go to visit them 2 or 3 times a year and you take a couple of people with you, look, all of a sudden now you're spending 5, 10%, maybe even more of the annual revenue just on those travel costs for maintaining the relationship. So you need to be tracking that, and you can put some of that off as a biz dev expense, but be careful about that because it's in my experience in working with agency businesses is a lot of expenses get buried in biz dev because you never feel guilty about spending on growing the business. So it's a good place to dump expenses that you don't want to talk about. And so you just need to make sure that anything you put in biz dev is a legitimate business development expense is really going to lead to new revenue and not just related to servicing existing business. So, all right, let's see. Let me try to scan this question. Um, okay. Um, All right, so this is from an agency owner who is in the process of redoing their website. So first, kudos there. You know, a lot of agencies don't spend enough time thinking about their own presence, spend all the time thinking about clients, and it is important to spend time on your own as an agency. But the it looks like the real nut of this question is, uh, should I post my pricing on the website? So, um, okay, so this is one of those things that I would say goes into the fairly controversial space. And if you talk to a bunch of different agency consultants, you'll probably get a bunch of different answers on this. I will tell you my perspective on publishing your pricing on your website. So I think it is at a minimum helpful to give some idea to prospects on your website what it is that you cost. And so, you know, whether that's saying, you know, our engagements start with an investment of $5,000 a month or $2,500 a month or whatever, or a typical project like this costs between ten and $30,000 or whatever, you know, whatever makes sense for the kind of business that you're doing and the kind of way that you're framing your agency's offering. But I think it is helpful to have some sort of financial information on the site that gives some guidance. And there's two reasons for this. The first one, and the one that most people think of, is because it scares away bad prospects. And it certainly can do that. So, you know, if you say, okay, my minimum monthly engagement is $5,000, if I've got someone who's got a $500 budget, you know, they're going to walk away. And so we're not going to have to spend the time talking that I could be spending with someone who's a more legitimate prospect. And I will say, in general, I'm not a big fan of scaring people off because you never know where a conversation is going to lead. And again, I know this is an area where I have a difference of opinion with a lot of other advisors, not just in the agency space, but elsewhere. I'm a big fan of pick your brain type meetings or opportunities to meet with, uh, you know, whether it's someone who's maybe they're not a prospective client today, but maybe they will be when their business grows down the road in a few years, or maybe they know somebody. You know, maybe I'll just learn something new. I very rarely take a meeting with someone who's a prospect or someone who's asked to pick my brain and say, "Oh God, that was just a total waste of my time." Does it happen? Yes, but more often than not, I will tell you I get something useful out of it. So, um, but you know, nevertheless, there still is value in posting that pricing so that you know someone who is not willing to invest that at least comes into any conversation they might have with a clear understanding. But the second reason is because in a lot of cases, you'll find that prospects and clients think you're a lot more expensive than you are, and this is often because you know they've maybe heard pricing from some of the big holding company agencies, or you know you know they don't have they've seen media coverage talking about you know what some big business paid an agency. You know who knows why, but they often have an inflated idea of what the cost is. So you really have prospects at both ends of the spectrum. Those who think, you know, well, I'll pay you $500 a month and you'll get me in the Wall Street Journal, and then you've got those who, you know, assume that you must be charging at least $50,000 a month. And this is something we need to be particularly careful about, particularly as small to mid-sized agencies try to look bigger. And it's so much easier to do today with the technology that's out there. People looking at your website, you know, a lot of you are probably listing folks on your website who maybe are contractors or those sorts of things. So you look very impressive to prospects, but you also look a lot bigger and therefore perhaps more expensive. So, you know, if you say, you know, hey, my minimum investment is $5,000 a month, well, for some prospects, that's going to be high and they'll take themselves out of contention for hiring you. But you'll also have people who will look at that and say, oh, well, you know, I can afford that. I'm a big fan of at least putting some kind of a guidance, whether that's minimums or ranges or typical numbers or things like that. I think that can be very helpful. Now, the other thing I will say to you is that most of you probably have typical engagements. So a lot of times I will take a look at client rosters for my clients or for other agencies that I'm talking with, and I will look, and most of them fall into, you know, just two or three different bands. There's usually not a ton of variation within the individual agencies as far as what's being charged. So a lot of agencies, even though and I've done this as well. You talk about, we're creating customized solutions and we're putting it all together, and but at the end of the day, they tend to fall into, just those two or three typical bands. And so if that's what you're doing, there is some benefit to thinking about whether you frame something as a product offering, instead of just a straight negotiated service cost. I'm not as enthusiastic about that. I think it can work, but I think you have to be careful, because if you are an agency, and you're, particularly if you're trying to get premium pricing, and which you, by the way, ought to be trying to do, if you're in that position and you're not running just a business based on trying to get as much volume as you can, churn and burn, if you will, um, then I think that listing specific product type pricing on your website, where it looks more like a restaurant menu, or a subscription service or something like that, there are potential benefits to it, but you just need to be careful, because that may be off-putting, to the kinds of clients that you're looking for. So, really, anytime you're talking about your marketing materials, whether that's your website content or whether you put pricing on it, you need to put yourselves in the shoes of your prospective clients and say, how will they see it? And so this, the other thing you want to be thinking about when you're thinking about redesigning your website is making sure that you are speaking to prospects in the language that they use. And particularly these days where a lot of agencies are trying to differentiate themselves to stand out, it's much more common that you'll go to their sites and they will be using, I don't want to say highbrow, but they will be using very sophisticated language that may not match exactly the language that their prospective clients will use. So, you may be out on a mission to reframe how we describe some aspect of what we do, as public relations and marcoms folks, but you also need to be thoughtful about the fact that when someone comes to your website, they want a certain kind of service or a certain kind of outcome. And if you're not speaking to them in those terms, they may get turned off, and they may go elsewhere. So just be really thinking about that, and make sure that you've got a good match, in all of the marketing materials that you're doing, but particularly, on your website, which also, by the way, will have an impact on SEO. People search for things in Google. Shocking, right? But they will make sure that you're speaking in the terms that they would put in there if they're looking for an agency like yours in a place like where you are, if they're looking for it geographically, or if they're looking for it with an industry specialty or that sort of thing. So anyway, just be very mindful of that whenever you're creating, the marketing content for your own business. And I'm sure you're probably already doing this when you think about the press releases that you're putting together, or the blog content, or all of the different things that you're creating for your own clients. Just make sure you're thinking about it for yourself, as well. Um, all right, so probably can get in at least one more question here. Um, I've got two or three here. Let me see which ones that are ones that would be most likely. Um, all right, so let's. Okay, so this is a good one. So this is, and this actually builds a little bit on what I talked about before. So maybe I can answer this one quickly, and then get at least another one on top of this in there. I like to try to get as many questions answered during this time as I can. And this is, how do I set my annual budget? How do I accurately forecast revenue? And so I already talked about this a little bit when I was talking about time tracking, project budgeting earlier. But since we are in that budget season and everybody's thinking about 2020, and hey guys, isn't it fun that we get to think about 2020 foresight for a change instead of hindsight? Yeah, but boom, I'm not going to be a stand-up comic. Sorry, it's best I can do. But anyway, as we look ahead to 2020, most of my clients right now are going through budget planning processes, and I'm helping them with it. And as I said before, it's working with the building blocks. So you should start by putting together take a look at your, what you think you're going to have for revenue next year. You start with your existing clients, figure out, okay, here's what I have for retainer business, or here's the kinds of clients that I have who come back regularly for project work, and so start plugging them in. um, Pro tip here: please do not put in 100% client retention. Doesn't happen for most agencies. Chances are you're going to lose a client or two along the way next year. And I'd be particularly conservative next year since I think most people would tend to say there's the likelihood of some sort of economic challenge next year, whether we call it a recession or not, who knows? But so do be thoughtful about that, and so you start with that band of your known business, the people that you can name by name and say these are the folks who are currently being serviced by me. They're maybe in the pipeline that I've got a good chance of closing, or I've got a verbal commit, or maybe they've signed it but they're just not starting until January 1, or so the revenue that you are likely to have booked. Now you need to look at the business development piece and be realistic here. It does you no good to say that you're going to double your revenue next year if you can't figure out what that means from a block by block, client by client, month by month perspective. And so, for example, I was looking at an agency budget about a year or so ago, and they had a very significant projection for top line increase. And they said, okay, well, we can do this because we're going to add 10 new clients next year. And on the face of it, okay, that it didn't sound unreasonable. They walked through why they could get 10 new clients and what their average client spend was. And so you looked at that and you're like, okay, well, those two numbers do match, except it assumed that they were all signed and billing on January 1. And so that's where it fell apart. So when you're putting together these budget projections, don't do it just as an annual budget, really do it month by month. And you need to look not just at the revenue piece, but you also need to look at what's the associated cost of that business. And I mean the cost of acquiring that business. So if you're projecting a large spike in your revenue, that means you're probably going to have a significant investment in business development, whether that's by taking away time from yourself and other members of your team who might be doing client service and redirecting it, or by actually hiring additional resources or vendors or those kinds of things in order to acquire those new clients. But then you need to look, because in the agency business, most of our clients are heavily front loaded from a resource perspective. Chances are you're spending more time with your clients in those first few months as you're building the relationship, as you're learning about them, than you will in later months. So you have sort of that bubble, or that slug in the line of expense up front, often with a lag in the revenue. So you also want to be doing with your accounting team, doing some cash flow projections to make sure that your rate of growth is sustainable. From a standpoint of how many folks do you need to hire and all that. Can you realistically bring that number of bodies on and train them and get them up to speed? But also, just do you have the cash to front to do those things? Assuming that you're going to have those upfront costs with onboarding, which most agencies have. And so you need to be thinking about that and planning for that to make sure that your whole plan is realistic and not just the numbers that you end up with in December of 2020. So really, from a budget standpoint, really just build it piece by piece. Um, you wanted to take a look at particularly your projections on staffing. That's an area where you can really get into trouble, because it's very difficult as an agency to add a lot of on a percentage basis, a lot of new client work, unless you have excess staff capacity. Most of us don't want to have a lot of excess staff capacity, because then you're paying people in advance of work. You need to. There's a happy balance to be achieved there. You never really want to be at 100% utilization, because you can't add clients reasonably at that point. You also don't want to be at 50% utilization, because then you've got a real gap, and you're paying for a lot of unused or underutilized time. So, but if you're doing this on a building block perspective, where you really drill in and you look month by month for each of the expenses that you have, the picture will start to become a lot more clear, and you'll be able to test your assumptions, and you'll look and you'll say, okay, well, is it really realistic that I get 5 new clients in Q1? Maybe, but unless you've got a really fat pipeline right now and a lot of folks close to closing, the odds that you're actually putting new revenue on the books in Q1 are pretty small. And certainly, at this point, we're mid October as we're doing this, and so we're what 10 weeks or so out from the end of the year. If you don't know of somebody right now that's likely to close, you're probably not going to have January 1 revenue from new business. Is it possible? Yes, but the reality is that most agency businesses take more than 10 weeks from first contact to close. So you need to look at your existing pipeline and figure out how long does it typically take you to move someone through your sales process. When do they typically start? What does the project look like from expense perspective? What is the revenue going to look like? And as you pull all that information together, then you'll have a pretty accurate budget for the year. And you're going to need to continue to update it. Most small to mid-sized agency businesses, need to make adjustments to their forecasts over the course of the year. The reality is we are not publicly traded companies. We're not out there with certain targets that we have to hit by the end of Q1. Otherwise, the markets are going to implode and tarnish our stock price and all that kind of stuff. So, we need to be realistic, and really, as we're, you know, I think it's helpful to think of it as a forecast more so than a budget. Budget sort of suggests, this is set in stone. There's also a habit when you talk about budgets to think, okay, well, I put this in from the expense side, so I definitely can spend it. You really need to be thinking more in terms of forecasting so that you're making the necessary adjustments over the course of the year. So certainly on a quarterly basis, you should be reviewing the numbers, seeing where they are, seeing what adjustments you need to make. Maybe you're running ahead of schedule on biz dev and generating more revenue. So now you need to look at, maybe making some of the investments sooner than you had thought, particularly in staffing, to make sure that you're meeting the needs. Just, be thoughtful about it and have a plan, because you start to get into trouble when you get buried in the day to day and you're drinking out of the fire hose, and you're fielding incoming fire from clients on one side, prospects on another, and employees here, and then you got your family commitments too, and it really can be complicated if you don't just say time out. I need to take a look at things. I need to figure out where we're headed from here. And as I look at the clock, unfortunately, where we're headed from here is the end of this Ask Chip Anything session. Hopefully, you have found it useful and informative. If you had a question for me that I didn't get to on this, I'll shoot you a note, respond to the email with some additional answer there. If you didn't get a chance to ask a question, but you have one, feel free to just shoot me an email at chip@agencyleadership.com, and I'll either point you to a resource or try to give you a quick answer via email so that you've got something, or I may also answer it on the next edition of Ask Chip Anything. So for additional resources, visit agencyleadership.com. Got a weekly newsletter called Agency Whispers. Sign up at the bottom of the page to receive that every Sunday night. It's got news about agencies and people in the news, and it's got a job listing for some of your junior folks, or if you've got a job that you're trying to hire for, I'm happy to include that. And then, of course, we've also got the Agency Leadership Council resource library, the Agency Leadership Council for you to join, and you get access to all sorts of sample documents, guides, workbooks, etc. So it can be a very useful resource for you. So agencyleadership.com, check all that out. If you have any more questions, chip@agencyleadership.com. If you have feedback on any of this, if you disagree with any of the advice I've given, love to hear that too. I always like to expand my horizons by having conversations like that. So again, chip@agencyleadership.com. And I thank you for joining me today.